Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, April 19th, 2016. We'll take a look at this chart of VRX, Valiant Pharma, guys. I want to show you how I knew to buy this trade basically when it was trading around $31. Now, what you saw here, and I bought it right over here, all right, right in this range. And actually, notice how this is an intraday chart, by the way, so this is going back to the 12th. And you can see here it gapped down on the 12th, reversed up and chopped around, and then it came back in here and it hit the low, and then when it bounced back up and it didn't take out that low, that was my signal to buy. Now that was compiled or composed with the fact that the daily chart was making a bullish pattern. So if you look here, and I want to zoom out here, so if you look at this big move, which by the way we caught in the research center as well for a monster gain all the way up, but if you look at this move down, this is what we call an inside bar retrace. So if you imagine this is one big move up, this is an inside move of that bigger move, right? And so basically this is what we look for when you have a chart that's trading at essentially 52-week lows or multi-year lows, and you have a sharp bounce off of it, especially when it's making higher highs, right? Pivot high, even though it made a lower low here, pivot high and higher high here, and then you get this retrace inside of that move. You look for Fibonacci retraces. What I was really looking for here is this little pivot area right here, pivot point right in this area, and then you bounce off of it and you retest it and don't take out that low right there. That's where you want to go long. So that's exactly what we did in the research center. We bought long at 31.20 here, right on this day on the 13th, and notice how it ran up here, chopped around, and then I knew it was going to go higher. Ultimately, it ran higher here early in today's day, and we sold it right up here, guys, right up here. Now, you might say, well, why didn't you hold it longer? I mean, obviously, hindsight's 20/20. It fell back down. But why did we sell it up at the highs? The answer is very simple. So we saw a lot of negative divergences on the market today. We know that the S&P is into a major level here, 2100 pierced on the S&P today. It's already reversed off of that, and that's why Valiant has come back in as well. But that reversal, that signal, basically told me at that point, I was up over 11% on the trade, to just take the money and run. I mean, we're basically up in a week, less than a week, 11%, 11.22% on this, and we just said, you know what, let's grab it off the table. The market's too shaky, and that's important, folks, because you just can't say, oh, I love ABC stock, or whatever. I mean, you might have a small cap you just love, or a mid cap or a large cap, and you're like, oh, I love it so much, I think it can go to $1 million a share. Well, yeah, in heaven maybe it will, but in reality, which we all have to realize we're in, that's not the way the market works, right? So you have to take into account other things besides how much you love a stock. And as much as I think eventually Valiant is going to go north of $40, maybe $50 when they get some of this stuff behind them, in the short term, that was the right move to take our profits and run, especially with a market that's literally teetering on the edge. And the reason why I say that is because the market today, right, so we had Netflix earnings yesterday, IBM earnings, both getting crushed today. The market early in the day on the S&P was up, which is very weird. But then all of a sudden you saw Amazon, Google, Tesla, all these stocks cratering. In fact, let me show some of these. I mean, look at these drops, guys. Look at Tesla down $11 on the day. Look at Amazon down 14. Google. And by the way, Amazon, good day trade coming. Look at this. Google down 17. When you see these stocks, and notice how they opened positive and went negative right away, that was the signal to start looking to exit Valiant and some of our longs. Got to look at that. And look at, oh man, if on an intraday basis, if Google gets down to 743 right here, that'll be a sick day trade. Amazon, by the way, oh man, this is a good level down here on Amazon. All right, I gotta go get trading, guys. I'll talk to you guys later. But bottom line is, I want to show you this right before I get going here. Take a look at this, guys. Here's our website. I want to show you the track record. If you go here on our website and just click on, or put your mouse over Investor Trade Alerts, it'll pop down. Research Center is where you want to go. 7-day free trial right here on this. And I'm logged in right now, so let me log out. But go back to that, Research Center, and then just log in here. And back here, 7-day free trial. Everything you get in the Research Center. Here's our track record. Click on this track record, guys. Take a look. 353% net return. That's just for 2016, basically 3.5 months into the year. Here's Valiant. We just closed out our entry, our exit, our percentage gains, our dates, and all that. These are all the trades we've traded. You can see a few losers in there, but overall, look at that. I mean, amazing action this year, guys. I love this market right now, and it's only going to get better. All right, I got to go get trading, guys. Thanks as always. Come join us here. Take the 7-day free trial. Remember, Investor Trade Alerts to the Research Center, and you have a 7-day free trial right there.